A lot of you want to be price action traders. And you've probably heard of a lot of different ways to do that. You've heard of support and resistance levels, more than likely. You've heard of head and shoulders patterns and breakout patterns. And the truth is, there is a correct combination of all of these. The perfect levels of structure to trade around. The perfect entry reason. The perfect stops and targets that will combine to give you an edge over the market. What I want you to do is imagine there's a safe. And inside of this safe is an edge over the market. Inside of this safe is a professional trading career. And the correct combination of price action techniques can get you inside of that safe and get you what's inside, being an edge over the market and a professional trading career. So in this video, what I want to do is share with you that combination. In this video, I'm going to show you the combination of price action techniques I used to get over a 9-to-1 risk reward on a trade I recently placed on the Aussie New Zealand. On the screen, you can see the Aussie New Zealand before I placed this trade. On the screen now, you can see an email that I sent out to all members of the EAP Training Program. There's the time and date in the top right-hand corner to show you this is not hindsight. I pointed this out before the trade took off and way before the 9-to-1 risk reward. And now on the screen, you can see what the Aussie New Zealand looks like right now. As you can see, we ended up getting about a 9-to-1 risk reward on this trade, and I want to show you exactly how we did it coming up after the intro and disclaimer. So what I need you to do, if you're interested in learning more about Forex trading, is go ahead and click the subscribe button down below the video to the right-hand side to be alerted when we come out with new content. We actually just posted a new video on Instagram called Day Trading Secrets. If you're interested in day trading and want to check that out, go give us a follow on Instagram at The Trading Channel. And I'll see you right after the intro and disclaimer to talk more about how to trade price action like a professional trader. See you in a second. All right, traders, welcome back. We're about to jump into the Aussie New Zealand trade and discuss the combination of price action techniques I used to get involved in that trade. But before we do, for the sake of complete transparency and to give you the reality that we all face as traders, including us professional traders, we don't win every trade. I do not win every trade. And all of my winners are not 9-to-1 risk reward trades. Here's the reality of the situation. The combination of techniques that I use on the exact currency pairs, time frames, and with the exact rules that I use for them normally gives me about a 55 to 65% chance to win a trade any given year. No one can tell what the market's going to do. I did not know the Aussie New Zealand trade was going to be a 10-to-1 risk reward almost. I didn't even know that trade was going to win. The reason I placed that trade isn't because I knew it was going to win. The reason I placed that trade, just like every other professional trader, is because I knew that that specific combination of price action techniques lining up created a strategy that I use in my trading plan. And this trading plan took me years to develop. It's not all about the techniques that I'm going to show you in this video. It's what I'm trying to tell you. It's not just about understanding how to trade based on price action. If you don't have the right mindset and understand what I just told you, that every trade's not going to win, that every trade isn't going to be a 9-to-1 risk reward, then you're going to have an incredibly difficult time ever becoming profitable. Let me go a little deeper into that before we start looking at everything that went into the Aussie New Zealand trade. At the time of this trade, the market was on this candle I'm about to go to with our market replay tool. The market was right in here, I do believe. At this point, do you think I had any idea what was going to happen next? I had no clue. No one would. If we could tell the future, every professional trader would be a billionaire right now. We're not all billionaires. So, for that reason, and what I'm telling you is that I had no idea what was going to happen next. The reason I placed this trade was because of technical factors that I combined, price action techniques that I combine every single time I place a trade, and I know combining them over a long period of time will give me an edge over the market. I can't control what the market's going to do. Neither can you. There was no way for me to control whether this trade was a winning trade or a losing trade. The only things I can control that are actually in our control as traders is the way we trade and the risk we take per trade. So what you need to make sure you're doing is placing trades based on an advantage you have over the market and with a solid risk management plan. And let's just be honest here. If you're watching this video, the likelihood that you're doing both of those things is very low. And I'm just trying to be brutally honest. I'm not trying to offend you. But the likelihood that you have a strategy that you've already tested through historical data and know it gives you an edge, and that you're using good risk management is pretty low. But those two things are the two things you need to go ahead and get in order before you place another live trade with live money. You need to have those two things understood and mastered. You need to have a strategy that gives you an edge over the market that you've tested, not that you learned from YouTube, that you actually tested yourself, so it can give you the confidence you need in order to go through drawdowns. And you need to have a risk management plan in place that gives you confidence and that also keeps you from losing so much money that you don't decide to switch strategies when going through drawdowns or completely blow your account. So those two factors of trading, risk management and discipline, are just as important as the techniques I'm going to show you. And what I really did that for was, one, to help you understand that, and two, anyone that's still here, kudos to you, because there was a lot of traders that just left from hearing that part. And here's the bad news for them. More than likely, the ones that have left are going to be the traders that either blow their accounts, switch strategies forever, go down the path of destruction in trading, or just quit trading altogether. And kudos to you yet again, because the fact that you're still here, listen to that, means that you, one, understand trading's about more than just your technique and the strategy you're using, but also you're about to learn every technique I used in order to place this Aussie New Zealand trade. So let's dive into that right now. So another thing I'll say right before we get started, don't take this strategy, don't take these techniques and start combining them on your own right now trying to place live trades, because you don't have your risk management mastered, you don't have discipline mastered. What I want you to do with this is take the techniques that I'm showing you in this video and go test them through historical data to see if they've produced a profit on the currency pair or financial instrument that you trade, and then optimize for the best currencies or the best pairs or the best stocks, whatever it is you trade, for this strategy to be on, create a risk management plan around that, and then demo trade it. There's no rush here for you to start trying to trade, and if you try to rush it, you're going to end up losing money, not making money in the long run. So this video is not for you to go start trading this live. This video is to give you something that took me years to create so that you can test it and go through the right process of creating a profitable trading career with it. So let's get started right now. The first thing that I looked for, the first price action technique that I want to show you, is using a higher time frame for the structure level you want to look at for possible trades. In this case, we were on a daily chart, and on that daily chart saw an opportunity for trend continuation. Here's what I mean by that. On this chart, the Aussie New Zealand has started an uptrend. Okay, we have broken above levels of resistance looking left. We have put in more than a 1, 2, 3 move. And what the market was doing at the time we placed this trade was pulling back into a previous level of resistance. So the first step in creating these massively profitable trades, again, all trades don't end up being a 9-to-1 risk reward, but a way of giving yourself a better chance of hitting a winning trade at a 9-to-1 at a huge risk reward, is by taking the higher time frame bias of trend continuation, looking for an up trade out of the Aussie New Zealand, and using that higher time frame bias when you go to a lower time frame. The reason we do this for a lower time frame entry, the reason for that is because on a lower time frame with that entry, we're going to have a very small stop loss. In this case, it was only a 25 pip stop loss. And I was expecting, because of the fact that we're in trend on a daily, pulling back to the previous resistance level that was broken, that gives me the bias that we're going to continue in trend on the daily. So I have the bias that we're continuing in trend on the daily chart. And if I can catch some type of entry reason down on a smaller time frame, for this specific scenario, it was the 1-hour chart. If I can catch an entry down here, I can put a very small stop loss for the potential gain that I expect off that daily trend. I hope that makes sense. When you're dropping down to the smaller time frame, the ATR, the average amount that those candles move, is much smaller than a daily candle. So in this case, what did we find? Remember, first step is the daily chart in trend. In this case, daily chart was in an uptrend. Second step, find your level of structure on the daily chart that was most recently broken as structure resistance or support. In our case here, it was this level of resistance looking left in this zone right here. Then dropping down to a smaller time frame, One of my favorite ways to trade in these areas is a double bottom or top with some type of confirmation. What does confirmation mean? The reason we look for confirmation, let's go over that first, is because every time a market's trending, and I can prove that right here, you will have situations where there are double tops throughout this trend. So you want to have some type of confirmation, because if you try to trade every double top or every double bottom, you will lose money. So what does confirmation mean? Well, you can use something as aggressive as having the confirmation be a green candle, on a double bottom. Let's say this candle was green. You can have my second bottom needs a green candle. That would give some type of confirmation that the market's heading higher from your second bottom, right? And I've actually taught that strategy here on YouTube, the full version of that strategy. I'll put a link for that in the top right-hand corner. You can also, if you're more conservative, wait for a full break of this neckline of the double bottom. That is a very conservative way to look at double bottoms. And then an even more conservative way is to wait on the break and close of that neckline and wait on a pullback to it, and then wait on that green candle or some type of candlestick pattern, and then trade in the direction, remember, of the higher time frame trend. We're trading based on the trend of a daily chart. This is the second part of those price action tips that I'm going to share with you in this video. Is down on your smaller time frame, you want to look for some type of price action pattern. This could have been a head and shoulders pattern. This could have been a push up from our zone that turned into a flag pattern and gave me a breakout. There's a lot of different ways you could have traded in this zone to create an advantage. And your job, remember, is to go back through the market and test for the best way. For me, one of my favorite ways is double bottoms and tops in these areas. Remember the reason. The reason is because I am looking to get a small stop loss. And if I have a double bottom, for me, I can have a stop loss under the bottom of the swing low of that double bottom. In this case, whenever I entered the trade, that was right here. So I was able to put a stop loss under the swing low of that double bottom, which gave me a very small risk considering I'm expecting big trend continuation on a daily chart. I don't have much risk at all here, considering how much of a move I'm expecting based on that daily chart trend, and that we're here at a daily chart resistance level that should turn to support. So with that being the case, the second step is entry. We just talked about that. Price action pattern would be entry. Stops and targets. You want your stops small, let's say below the swing low of a double bottom, below the head on a head and shoulders pattern. Will still give you a pretty small stop in comparison to what you're looking at on a daily. And I'll go over that really quickly. It would look like this on an hourly, and you could take your position out at the second shoulder of the head and shoulders. Your stop loss would just be below the head. This would be another way of taking an entry in this zone based on you looking for a long opportunity out of this zone. In terms of targets, my favorite way of taking targets in this case is to take my first target off at a 1-to-1 risk reward so that I can have I'm safe. I've got my 1-to-1 risk reward. My next stop loss is moved up to break even. I trade 2 positions and then manage my position on the way up. If you're brand new, or even if you're not yet consistently profitable, I would not do that. At the beginning of your trading career, that's going to be way too complicated. So what you probably need to do is have a rule in place in your trading plan that states that you take off targets at the previous level of resistance. Now, that would not have provided a 9-to-1 risk reward, but still a 4.4 to 1 risk reward is not a bad position to be in. So if you have a higher than 1-to-1 risk reward, back up to your smaller time frame, highest resistance before the pullback, then use that as your target when you're testing. Remember, I'm not telling you to go trade this. Use that as a target when you're testing to see how much of an advantage, how much of an edge this potential strategy will give you in the markets overall. So if you were doing that, if we can play forward here, you can see that the market would have pushed up and hit your targets quite easily within the next couple of days. I personally was managing this position on the way up, and whenever I found a reason to exit on a higher time frame, I actually used a 4-hour chart for my reason for exit on this trade. I went ahead and took that trade off once I got that reason to exit right up here around a 9-to-1 risk reward. So in terms of breaking down exactly what you should be looking for if you want to trade price action like a professional trader, you don't want to go out and just trade candlestick patterns or just trade support and resistance levels. You want this perfect combination. And for me, one of the most beneficial combinations has been looking on a daily chart, finding my trend and my latest level of structure on that daily chart. When the market gets back into that level after breaking above that level of resistance, in this case, when the market gets back in that level, I like to look on a 4-hour or 1-hour time frame for price action patterns. When I get a price action pattern in this area, I like to have a stop loss below the lowest swing low of that price action pattern to give myself a really small stop loss, because on the daily chart, I already know I'm in an uptrend. I already know what I'm looking for in a sense. So in that case, I give myself a big risk to reward ratio. And if I can win at 50% of the time and have opportunities that give me a 4.1 to 1 risk reward ratio, or reward to risk ratio, then I want to take that trade as many times as possible and as much as possible. And remember, none of this is important if you don't understand risk management and you don't understand discipline. To give you an example of that, this trade, as I just told it to you, on the exact pairs I trade with my exact stop and targets that I use, on the exact time frames that I trade, there's a lot of specific information that goes into this. But with all of that specific information, I have about a 60% chance of being right on average. That means I'm losing 40 out of 100 trades. And although that doesn't sound bad in your head right now, I want you to think about losing 8 trades in a row. Because with a 60% chance to win, I've lost more than 8 trades in a row before. And losing 8 trades in a row with my risk management at 1 to 2% per trade does not bother me. I'm okay losing 8 trades in a row. I wouldn't be if I was risking 5% per trade, and that may be something you're doing. This is why risk management is so important. If you're losing 8 trades in a row at 5%, you just lost 40% of your account. And that's something that happens even if you're trading a really good strategy that provides an edge over the market. So you have to make sure that your risk management's in place. You have to make sure your discipline's there for when you lose 6 to 8 trades in a row possibly. With a strategy like this, you continue to trade that strategy because you're disciplined. What builds that is testing this yourself. That's why I'm telling you, do not go trade this. You need to test it yourself so that you can see throughout the past 100 times this exact situation has happened. On the Aussie New Zealand, on the 1-hour chart, while looking at the daily chart for your trend and structure confirmation, out of the past 100 times this exact thing has happened, it's provided me with a 60% chance to win and an average of a 1.5 to 1 risk reward, whatever that ends up being. Those numbers will fluctuate depending on a lot of different factors, but that's where you have to put in the work. That's where I can't back test for you. I can't give you confidence if you're not going to go put in the work and back test yourself. I can tell you to risk less on your account, but I can't make you risk less and keep you in this trading game longer. That's things that you have to choose to do. And those are the things that are going to separate you from the 95% of traders that normally lose money. If you made it through this whole video, I want to thank you for watching. If you enjoyed it, go ahead and click that subscribe button. If you want to learn a few more advanced strategies, I also have the EAP Training Program. The link for that is in the description. In it, we'll go through all the strategies that I actually use. You can learn the exact strategy we used here on the, Aussie New Zealand trade. And it's also a mentorship program so that if you have any questions, you can email me with those questions and I'll get back to you in a very timely manner to make sure you're not confused about Forex, about the program, to make sure you have the best odds of becoming a professional trader. If that's not something you're interested in, that's totally fine too. Make sure you click that like button, give us a follow over at the trading channel on Instagram in order to get some of these pre-release videos like day trading secrets over there. And I will talk to you in the next video. See you soon.